Hello, my dears. Today we will speak of how to buy a company from somebody and if this is helpful or not for you. Everybody wants to have a business. Either it's a newly startup business or set up business, or it's a business which already has some historic behind, or if it's a franchise or so on. So everybody wants to have a successful business, and in order to have this, you have the choice also to buy a company here in Romania. Would you choose this? Would you not? We will see. Stay with me and let's discover together what are the benefits and pros and cons for this. Okay, let's see what are the reasons why it might help you to buy a business. Basically, it may be a good idea to buy a company if you want to have some historic in order to avoid failure. The second reason why it might be a good idea is because you want to have a company which already has a clientele that is tested and that is functional, which means that you invest in something that is already okay. And the third reason would be, of course, if you want to have some credit or some credit lines from the banks, or if you want to have some grants from our government. So this would be also a good idea. But before starting to buy a business, before even thinking about buying a business, let's see what are the steps and what you need to check in order that this process should be successful. Buying businesses involves in general a lot of risks and of course unforeseen events that may affect this business further or your decision further. So maybe that is why it's better to follow some specific steps in order to be sure that what you want to do is a successful business. And from my point of view, the first step would be to identify the opportunities, because in all the market, the opportunities are a lot, and you may find businesses to be sold on a lot of internet websites and so on, like OLX here in Romania, like Facebook, on all the entrepreneurial groups, on Instagram or any other social marketing platforms. But you should be really careful, because you need to identify if that potential business is accordingly to your niche, to what you know or how to do. It's really important to have something to check or to see or to know how to check that kind of business. So identifying the opportunity is the most important of it. The second step on buying a company would be the business evaluation. Basically, you need to analyze really careful all the financial data, all the liabilities, all the debts that company has. Of course, if there is some situation in which you can see the suppliers, the clients, everything related to fiscal or taxes, it would be really great. The first step would be the price negotiation, because everything in Romania can be negotiated, especially when you buy a business for which you don't know for sure if all the numbers were real or not. So you can discuss with the buyer, with the seller, and you can negotiate all the prices. The fourth step would be the due diligence, which means that you need to rely on certain specialists, fiscal specialists, auditors, evaluators, independent evaluators that can do this in your behalf to analyze balance sheets, to analyze assets, to analyze everything that that company has in order to buy something which, as I said, it's real. Let's say that everything went okay and you are in the final step, which is purchasing. Then you need to make the financial purchase, meaning that you need to transfer the money. That can be done either by your bank account, either on the new company's bank account. Let's say you can transfer to the previous owner all the money that he asked, and of course that you already negotiated with him. And final step, and everything in this case should have been okay, is closing the deal, meaning that you sign all the contracts or the cession contracts or the selling contracts that you need to do in order that that business in the end should be yours. Okay, let's see. Are there any risks associated with buying a company? Of course there are. In each field there are risks, but also you can have gains. So it's really important to analyze the risk that you may encounter and to see if it's worth it or not. Among the most common risk that you can face when buying a company would be like this: hidden tax and liabilities. These are basically the most important, and if you do not properly check what you want to do, or if you do not rely on specialists that can help you in this kind of due diligence, then you may have the surprise to have, let's say, a fiscal control from fiscal authorities, and after that control to have some hidden tax that you should have paid or the previous owner should have paid. So basically the hidden liabilities and taxes should be your number one priority, and that is why you need to contact specialists to do this, not only yourself. Another risk that you may encounter is incorrect evaluation of the assets. Let's say that you buy a company which has already 10-20 years of historic. So in that case, if there are some equipments that they bought, you need to know exactly what is the price value of that equipment, because they can be already depreciated and you can sell it, let's say, at a few RON as amount. But if the value on the market is higher, if you want to sell them, then you need to know what is the value, their real value in the market today. Also for this, I would recommend you to contact a specialist, like an authorized independent evaluator, and he can help you with all this tax evaluation of all the assets. Another risk that you may face is the legislative change, but this somehow it's something that you cannot prevent. For this, my advice would be to have constantly with you somebody that knows the legislation here in Romania in order to best advise you regarding this aspect. Also, another risk that you may face would be tax audits, which means that if, for example, you take over a company, tax authorities have the right to check 5 years before. So my advice when taking over a company, when buying a company, would be to check all these 5 years before, in order not to have a surprise like VAT that was not declared, or tax on income that was not paid or declared. And also, for doing this, you need to have near you an auditor, a chartered accountant, or a fiscal consultant that may help you in order to prevent this risk. And last would be, let's say, the tax loss transfer. Sometimes the taxes or the transfers of the taxes cannot be done to the new owner, so maybe on long term this can or should affect the new owner. So also be attentive to these kind of situations. That being said, let's see how you can minimize all these risks. From my point of view, that would be really helpful if you have a team when you take over a company, when you buy a company, a team that can help you and support you and do all this due diligence in your behalf. Because only in this case you can be sure that what you bought is what you need, and it's not something that may give you big surprises in the future. Now I will tell you a few things that you can check when you buy a business, but these are somehow some examples, is not everything. This is something that we in MBV Tax we can do, or we can help you with, but it's not only this. Let's see, and if you have any comments, any requests, any questions, you can let them on the comments area of this section of the video. Here are some key things that you should check, and let's start with the company's papers. For example, there are some mandatory papers that a company should have, like unique register control or fiscal register control, or these two should be taken from fiscal authorities, or to see if the field that the business has is in accordance with all the authorization and legislation, and has everything needed to be functional. The mairie acceptance, sanitary and veterinary acceptance, the firefighters acceptance, and so on. There are a lot of these authorizations depending on the field of the activity of each client. So you should ask before if it's something which is mandatory to have or not. Then there are some accounting papers that you should check as well. First of all are the financial situations. After that, the clients and the possibility of non-payment. The suppliers and what are the debts, the assets, the receivable, the liabilities, and so on. There are a lot of things that you can also check only in accounting, and to see if the seller is correct with you and if he sells you something which is okay or not. Of course, you need to check if the company has leasing contracts, if it has credit contracts, if it has some contracts that are closed in the behalf of the company without your permission, or at least to know about them in the future. And last but not least are the taxes and the duties, meaning taxes, if all the tax returns declaration are filed, are submitted, all the payments are done, and so on. Now I will talk a little bit about the most common mistakes that you can do when buying a company. And first of all is incorrect evaluation. As I said, the price should reflect the value of the company with all its assets, or with all its liabilities, and with all its situation. So be really attentive to the evaluation, not to be too much or too less, because sometimes you can miss some important business opportunities if you are not correctly evaluate the business that you are about to buy. The second mistake would be to underestimate the time required to do this kind of business acquisition, because here in Romania, only to the trade register to change the previous shareholder with a new shareholder may last 1 or 2 weeks. At this, if you add all the evaluations and all the checkups that you need to do, it should be at least 1 month if the company is not too complicated. So take into consideration this, the evaluation time of the company, also in order to establish the correct price and to establish if you can take it or not. Secondly would be to set an unrealistic price. which means that either you as a buyer, either the seller, would establish a price that does not reflect the value in the market of that company. So also need to be really attentive. Another mistake that you can make is poor negotiation. As I said, with a correct and a proper vision about the company that you're about to buy, you can set up a price and that price can be negotiated. Basically, without a negotiation strategy, you may miss out some other important opportunities. So again, really attentive to negotiation. And let's say the final common mistake that you can make is to ignore the tax implication. Basically, ignoring the tax implication can affect you further with penalties, interest, and so on. Also, if you don't have a proper accountant or a proper consultant with you all along this process, you may pay more than it is. Now, in the end, I can guarantee you that we at MBV Tax can help you with all these procedures and files. You just need to ask us to do this. You just need to ask us to supervise this process, because it's important for you and for your future safeness here in Romania. So that being said, what would you prefer, to buy a company or to make a new one? I'm waiting your comments here in the comment area. Don't forget to subscribe, and see you in our next videos.